Welcome to Talk Tickers, where we break down the earnings calls that matter. Today, we're diving into Gorilla Technology, ticker GRRR. On the surface, their Q3 earnings showed a slight miss on profit, but the stock soared over 9%. So what did the market see that wasn't obvious in those headline numbers? Let's get into it, because they are telling a story about a pivot that could change everything for this company.
Here's our game plan. We'll start with the actual numbers from the Q3 print. Then, we'll get into the real meat of the story, management's huge pivot. After that, we'll look at the tough questions from the Q&A. And finally, we'll wrap it all up with our own take in the next call, including our rating.
All right, first up, the Q3 print. Now, this is one of those classic situations where if you just glanced at the numbers, you'd completely miss the real story and why the stock made such a big move.
So here are the numbers. Revenue came in at $26.5 million, which was pretty much exactly what Wall Street expected, in line. But adjusted earnings per share missed by 2 cents. Now, in a jumpy market like this one, even a tiny miss like that can sometimes send a stock tumbling. But that's not what happened here. Not at all.
Instead, the stock absolutely ripped higher, closing up almost 9.5% on volume that was double its recent average. That's a huge signal. It tells you that the smart money was plugged into the conference call and they were pricing this company based on its future, not a small miss that's already in the rearview mirror.
So you gotta ask, what was on that call that drove that massive jump? Well, it was all about the story management told. They basically laid out a powerful, and I mean powerful vision for a complete transformation of the business.
And this slide just lays it out perfectly. Look at the difference. The Gorilla of yesterday? It was a niche company doing one-off projects, which meant volatile revenue. They had messy, toxic financing and were in debt. The Gorilla of today is a completely different animal. They're positioning themselves as a sovereign AI operator, which basically means they build and run AI infrastructure for governments. Their revenue is now backed by long-term contracts. Their cap table is clean. And get this, they're sitting on over $106 million in net cash.
Now, the centerpiece, the absolute foundation of this entire transformation, is one single massive deal, a $1.4 billion multi-year contract to build and operate an AI data center network for a company called Freyr in Southeast Asia. This isn't just another project. This is the whole story.
And just in case anyone had any doubts, CEO Jay Chandan got on the call and could not have been more direct. He basically drew a line in the sand with this quote. He wanted to make it crystal clear to the market. This deal is real, it's signed, and work is already starting. This contract is the bedrock of their guidance for years to come.
And here you can see what that contract does to their growth. I mean, look at the sheer velocity here. They did just $22 million in revenue back in 2022. Now they're guiding to a midpoint of $168 million in 2026. That is more than a 7-fold increase in just a few years. You can literally see the growth kicking into a higher gear. Okay, but a story this good, a growth ramp this steep, it's naturally going to invite some tough questions, right? And that's exactly what happened. The analyst Q&A session zeroed in on the gap between having a signed contract and actually delivering on it. It was all about the execution. And these were the big worries. Can they actually get their hands on all the high-demand GPUs they need from partners like NVIDIA? What happens if their customers are slow to get the sites and power ready? How are they going to manage their cash flow as they ramp up these huge projects? And, that $5.4 million currency loss they took in Q3 was a real wake-up call about foreign exchange risk. So the conversation has completely shifted. It's no longer about can they win the business. It's all about can they execute at this new scale.
So, let's put all these pieces together and look ahead. What should we be watching for when Gorilla Technology reports next? And what's our final verdict on the stock right now?
All right, here's our outlook for the next call. First, we expect them to hit their 2025 guidance and, importantly, generate positive operating cash flow. Second, for the stock price, get ready for a bumpy ride. It's going to stay volatile. The stock will be a battleground between the bulls who see the massive long-term potential and the bears who are worried about all those execution risks. Any and all updates on that Freyr contract will be the key catalyst.
And that brings us to our final rating. We are initiating coverage with an outperform. Look, the pivot to a sovereign AI operator is a true game changer. That contract backlog gives them a level of predictability that's super rare for a company this size. And that growth profile, it's just too compelling to ignore. Yes, the risks are very real and significant, but in our view, the potential reward here is even bigger.
And to wrap things up, our standard but very important disclaimer.
This is not financial advice.